Good morning, all. And, thank you so much for joining us today. I also want to thank La Fuerza, Giovanna, and her awesome team for taking the initiative to bring this information to the community that's so important for us to have the correct information on. Now, the purpose of the webinar today is to talk about the Employee Retention Tax Credit, also known as ERC. We're going to try to find out what it is. We're going to work on what's changed, and we're going to find out how to determine if you're eligible for these funds. There are a lot of moving parts to this, and I promise I will try to use the KISS method so that you can understand all the details. And by KISS, I mean keeping it super simple. Now, we all know what we've been through over the last couple of years. It's been very difficult, and it's been trying for everyone. The world shut down, the economy came to a halt, and businesses struggled and are still struggling to survive. There was a law that was signed in on March of 2020. It was a stimulus package to help make funding available to assist businesses and individuals during the crisis. There were three components to this that we'll kind of review: the Paycheck Protection Program, or PPP, the Economic Injury Disaster Loan, or EIDL, and the Employee Retention Tax Credit. Now, most people have heard of the PPP and the EIDL, but very few people had heard of the Employee Retention Tax Credit, or ERC. Sorry about that. Okay. Sorry about that. Turn that off. So again, there were three programs: PPP, EIDL, and ERC. The PPP and the EIDL were both loans, but the ERC was actually a tax refund that does not have to be paid back, and you do not have to expose how you use these funds. So it's a little more flexible, but most people use the PPP or the EIDL. So the Employee Retention Tax Credit was pretty underutilized at that time. In fact, last summer, they said that only 5% of those funds earmarked for ERC had been used or distributed. So what is the Employee Retention Tax Credit? It's basically a refundable tax credit that businesses can claim on qualified W-2 wages, and that would include any health insurance costs that they may have paid in premiums on behalf of their employees in 2020 and 2021. And I say W-2 wages, which is very important because 1099 wages or independent contractors, their wages would not be included in the analysis of the calculation for what you can apply for. And let's just take a look at both years. There's a figure that keeps being thrown around: $26,000 is the maximum that you can qualify for, and that is the case. And I just want to show you where those numbers are coming from. In 2020, the law allowed eligible employers to claim a credit against 50% of the wages paid per quarter, up to $10,000 per employee. So that would be $5,000 per employee, and that was for the year. That's the maximum they can apply for in 2020 for the year, $5,000 per employee. Then in 2021, that changed, and it now allows eligible employers to claim a credit against 70% up to $10,000 of wages. However, this is for the first 3 quarters of 2021. So if it's $7,000 times 3 quarters, that's $21,000 per employee for the 3 quarters. So in terms of that, $5,000 is the annual maximum in 2020, $21,000 is the maximum per employee in 2021. So if an employer qualifies for all quarters, the maximum they will receive is $26,000. If they qualify for all quarters in 20 and 21. That's where that number is coming from. So just to break it down a little more, if an employer qualifies for all quarters and they get $26,000 per employee and they have, say, 10 employees, that could result in $250,000 in their pocket based on those quarters. So what employers are eligible? In order to qualify, an organization must be carrying on a trade or operating as a business in the financial year of 20 or 21. They also may have experienced a full or partial suspension due to the pandemic and a governmental order. There are also supply chain disruptions that can be considered because vendors who experienced shutdowns could not provide supplies for me to run my business. Or they could have experienced a significant loss of gross receipts compared to the same quarter in 2019. And then they added in something called the recovery startup business. And those businesses that started operations after February 15th of 2020 and had less than $1 million in revenue could also qualify. So these are some of the changes that will apply now. So I want to talk a little bit about the recovery startup business because this is kind of overlooked. But a recovery startup business, for the purposes of employee retention credit, is defined as a business that began operations, as I said, on or after February 15, 2020, which is post-pandemic, and average annual gross receipts that do not exceed $1 million. They must have at least one W-2 employee, and they would qualify for quarters 3 and 4 of 2021. The maximum they could qualify for is $50,000 per quarter. But basically, they could end up with $100,000 in stimulus money in their pocket if they qualify for quarter 3 and quarter 4 of 2021. So how do you find out if you qualify for ERC? You have to ask yourself a couple of questions. First question is, are you a business owner? If the answer is yes, you can move to the next question. Do you pay W-2 wages? Again, if that answer is yes, you can continue. And remember what I said before, 1099 and independent contractor wages do not qualify. Then it comes down to the qualifying question. Answer one of these questions yes, and you probably qualify. Was your business affected by the pandemic as it relates to a partial or full shutdown due to a governmental order? And then that big word comes in, OR, or. Because as I tell everybody, you don't have to qualify for all three. You have to, the criteria only requires that you have one of these incidents. Were your gross receipts down compared to 2019? Were your gross receipts down 50% in 2020 compared to 2019? And basically what that means is if S.J. Edwards, Inc., the revenue was $1 million in 2019, and then in 2020, it dropped to $500,000, I could qualify. Then they loosened it up a little bit more for 2021. They said, well, you only have to drop 20%. So if S.J. Edwards, Inc. earned $1 million in 2019, and then it dropped to $800,000 in 2021, that's my 80%, then I could qualify. And then there's that big word again, or. Did you experience supply chain disruptions? Were you unable to get critical goods necessary to conduct business? And this was huge because even though I might be in business, I might not be able to get critical goods that I need in order to run my business. And we'll talk about that a little more in the next couple of screens. So just to summarize a little bit, this is how it works. A company or business that has W-2 employees can qualify up to a maximum of $26,000 per employee. Again, in 2020, that was $5,000 per employee per year. And then in 2021, for quarters 1 to 3, it was $7,000 per quarter or $21,000 for that year. So the total maximum is $26,000 per employee. This is huge also because it does include health insurance premiums, and we all know how expensive health insurance is. So if an employer is contributing on the behalf of an employee, that could result in substantial dollars as well. ERC is not a loan. It does not have to be paid back. And it is a refundable tax credit, which means you're actually going to receive checks from the IRS for any quarters that you qualify for. Now, this sounds too good to be true, and that's what I hear all the time, and I actually felt that way myself when I heard about it. But I did my research, went to my professor's Google, Professor YouTube, and I looked it up. It was on Google, there were videos on YouTube, and then I actually went to the IRS.gov website, and here it was. So it is real. The law was signed on March of 2020, and then there were some changes made in December of 2020 with the COVID-19 relief package. They expanded the eligibility. Previously, if you qualified for PPP, you could not qualify for ERC. That has changed. So if you receive PPP, you can still qualify for ERC. And I can't tell you how many employers feel that they can't qualify for ERC because they did receive PPP. I always get that. As soon as I walk in, they'll say, and my accountant told me I can't qualify, I already got PPP. Well, laws have changed, so they could qualify. They did lower the threshold, as I said, for a significant decline in gross receipts from 50% requirement to a 20% decline requirement. So that makes it a little easier for businesses to qualify. And then they added in the supply chain disruption, which was huge as well, because as I said before, if I can't get goods to run my business, that impacts my business negatively, and it's because of COVID that occurred. They also increased the size of the maximum number of employees that employer can have from 100 maximum employees to 500. This opened the doors for a lot of other corporations that weren't able to apply in 2020. Unfortunately for mom and pop shops, this may not qualify because there is in the law, it says that they are majority ownership, defined as over 50% owner. They do not qualify, nor do the W-2 wages of any immediate family members. And family members include children, brother, sister, all of these relationships on the bottom. So unfortunately for mom and pop shops, like a pizzeria or a small restaurant, a laundromat, if they are a majority ownership, they probably won't qualify for this program. I said that already, that if you already applied and received PPP, you can apply for ERC as well. This is another myth. Another myth is that if I earn more money than I did in 2019, I can't qualify. Well, that's not correct. You can qualify, as I said before, by meeting one of the other criteria, either revenue reduction or full or partial shutdown of your business due to COVID-19, or you experience supply chain disruption and could not get critical goods necessary to run your business. You have to claim full or partial suspension. The business must cease all operations, and we know of a lot of businesses that had to shut down totally. Or the business can still continue to operate with some, but not all of its normal operations. They may have had to close the doors for a couple of hours. They couldn't, they had to reduce their operating hours. And if, one note here, if someone could go directly from in-office work to telemarketing work or Zoom or remote, that may not qualify because you did not really stop doing business. All you did was move the operation to a home. However, if you had to purchase laptops and other things like that, you may be able to claim those quarters where you move to remote enrollment. We had companies that are like an employee benefits firm that has to sit down with employees in order to enroll them in their plans. They couldn't do that. So that would qualify them for the ERC. And just to go over what an order from a government authority is, it's just an order from the city's mayor or governor stating that all non-essential businesses must close for a specified period, or an emergency proclamation that residents have to shelter in place, except employees of essential businesses, or an order imposing a curfew on residents. There was an order also mandating that if someone tested positive for COVID, you had to shut down and get the office cleaned and disinfected. So those would be considered orders from an appropriate government authority. I just want to go over a couple of examples of full or partial shutdowns, supply chain disruptions, and reduction in hours. I mentioned restaurants. I had a restaurant that I met with a couple of weeks ago, and he immediately told me, well, my CPA said I can't qualify because I already have a PPP, and my revenue went through the ceiling because of our pickup and delivery. That definitely took over the revenue, and the revenue was great. So I said to him, well, that's wonderful, and your accountant was right about the PPP, but that has changed, and there are other criteria. So let me ask you, did you have to shut down? And he said, yes, I shut down for 2 or 3 months. I said, okay, that's a qualifying criteria. I said, did you have problems getting goods and services? He said, yeah, I couldn't get my alcoholic beverages. And that's like 30% of my revenue on the weekend. And he said, I couldn't get go-to boxes and I couldn't get meats and cheeses. I said, well, it looks like you qualify. So we sat down. I said, could you do me a favor at some point when we sit down, at least go over the qualifying survey to see if you qualify? And he said, sure. But he did have to also limit capacity. Remember, you can only have 50% in dining capacity because of the social distancing requirement. So he really qualified on 2 or 3 different criteria, but had been misled by his accountant saying that because he got PPP, he couldn't apply, and because he made money, he couldn't apply. So be very careful with the information that you're receiving. And then there were other clients of ours that just had to close down totally, or they had to close down for certain hours. They couldn't have more than a couple of people in the office at one time. So it did impact them negatively in terms of the hours and restrictions. Then we had an electrical company, actually a general contractor who was doing a job for the government. That job came to a halt, so that impacted him. But also he was unable to get certain wiring, pallets. There were so many things that he needed in order to continue the job that he couldn't get due to the COVID-19 restrictions. So that impacted him, so he was able to qualify for the ERC. So once you decide if you can qualify, again, you have to ask yourself these questions. Do you have W-2 employees? Remember, 1099 doesn't count. Was your business interrupted or modified due to a government shutdown? Did you have supply chain disruption issues for your business? And did you have a decrease in revenue versus 2019? Again, 50% in 2020, 20% in 2021. So that's what you have to do first. Ask yourself those questions, and if any of them are yes, you can move on. The next step, which I encourage people to do, is complete a free ERC qualification survey. It costs you nothing. You have nothing to lose. If it's either yay or nay, you can get the money or you can't. And there are certain forms that you have to have available when you get on the survey. Okay. These documents, you need a confirmation of any other tax credits that you receive, PPP, EIDL, whatever that is, because the government does not want you to double dip. So whatever you use PPP for in terms of payroll will be taken into consideration once the specialist do the analysis for you. You also have to have quarterly payroll tax returns. Your Form 941, which is what your CPA or your payroll provider files on a quarterly basis. You need that for 2020 and 2021, because what they have to do is amend your 941, and that's called a 941X. And once they amend it, that's what they're going to send to the IRS. You need to have an average number of full-time employees for each quarter. Again, that's what you would get from your payroll provider or your CPA. If you're an owner and you own more than 50%, you have to provide the name and of any relatives on the payroll. Their wages would not qualify. However, if you have other W-2 employees, their wages would qualify for the calculation. And you need weekly payroll reports for March of 2020 and quarterly payroll reports for subsequent months. And these reports should show all the details by employee. And then, of course, you're going to show your qualified health plan expenses that you may have contributed on behalf of your employee. So these are documents you really need to get your hands on before you go and try to see if you qualify. So what I always say is you can't have someone dibbling and dabbling in this for you. There's too much money on the table. You need to have someone that specializes in the ERC. So the first step is that you be pre-qualified by a specialist, and they can quickly inform you of the size of your credit refund. Number 2, you'll submit your payroll tax returns and PPP information and all the documents that I mentioned earlier. The specialist will then analyze those documents. They will maximize your employee's retention tax credit and submit your application to the IRS. Now, I do want to take a minute and go through a qualifying survey quickly. I'm not going to go through all the details because could take 10 to 15 minutes. But I want to show you what that looks like. Okay. This is what I actually sat down and did with the restaurant owner that I mentioned earlier. Okay, I sat down with him and I said, as I told you before, let's just see if you qualify. Let's see if you can answer yes to any of these criteria that will determine if you are eligible for the ERC. So we started a new application. I'm just going to put my information in there. And I said to him, how many employees did you average in 2020? And I think we had about 30. So for the year of 2020, you probably could qualify for as much as $120,000. In 2021, his average full-time W employee count was about 25, because I had to let a couple of people go. But as you can see, the potential ERC amount is over $400,000 if he qualifies for every quarter. So then I said, okay, well, let's move forward. This is how it works. You have to answer the question. They'll let you know if you qualify. And if you do, then you're going to upload your tax and payroll documentation. And then the team will process and file your return, your 941. So this is the information he needed to have available. The average number of full-time employees for 2019, gross receipts for each quarter of 2019, 20, and 21. And this is only if he's going to request the ERC based on a reduction in revenue. In his case, he wasn't. Remember, his revenue increased during the year. And any information on how government shutdowns impacted the business. So let's continue. Did you pay any W-2 wages in 2020 or 2021? His answer was yes. You see here, they ask about majority owners. There were none, so I'm just going to type in none. When did you start your business? And this definitely is because of the recovery startup businesses. If they started after February 15th, they would click there, but he had started, of course, before February 15th, 2020. Then they asked, how many full-time employees did you average? Was it fewer than 100, more than 100, or over 500 full-time employees? In his case, it was fewer than 100. It just tells him how he can qualify again, revenue reduction or supply disruption or full or partial suspension. In terms of revenue reduction, remember, he made money. So did you experience any revenue reductions in 20 or 21? His answer was no. In terms of supply disruptions, continue. Did you experience a supply chain disruption? His answer was yes. In which quarters? They're going to ask you which quarters you were impacted. So he was impacted all of 2020, all 3 quarters, and the first 2 quarters of 2021. And he was not able to really replace the supplier. In terms of full or partial suspension, they actually give you some examples, IRS examples, which is great. So you can look through this and you can say, okay, in his case, a restaurant must close its on-site dining or every other table due to government orders, but can still operate its drive-through or carry-out service. This would be considered partially suspended. Did you experience a full or partial suspension? The answer is yes. They ask about the type of suspension. Was it a reduction in hours, inability to access equipment, reduction in services offered, reduction in capacity? That would apply to him. Travel restrictions, that would apply, or actual suspension. Since he closed down 2 or 3 months, we put actual suspension. And then put in a description of what happened. Then they asked again, which quarters were you impacted by the suspension? For him, we just put the year of 2020, and the first 2 quarters of 2021. Continue. Congratulations. Based on your answers, you qualify for the following quarter. So they gave him a list of the quarters that he qualified for, and they asked him to continue. So in 2020, his estimated credit amount was $120,000. In 2021, his estimated credit amount per quarter is $96,250. And when you combine the two, he qualified for over $300,000. This is money that he would have left on the table had he not at least tried to find out if he qualified for the ERC. And then they just ask you to continue. You confirm your information. I'm not going to submit this, but that's how this program works. And I think that whatever company you work with, you really need to go through this process to determine whether or not you qualify. Get out of here. So again, as I said, there's step 1, 2, and 3. Then once you submit your paperwork and the IRS receives your money, I mean your application, you can sit back and say like Jerry Maguire said, IRS, show me the money. Now it is going to take some time. I'm hearing it can take as much as 6 months to a year before you get your check, but you will actually receive a check in the mail based on several checks for each quarter that you qualify. So I encourage you not to leave any money on the table. This is a once-in-a-lifetime opportunity. The government is trying to support small businesses and help stimulate the economy, save businesses, create and save jobs. And for small businesses, it's important because most of us want to leave a legacy for our families. So if you have not taken advantage of this, at least try to go online. There are a lot of companies doing this right now. You can work with us, you can work with other companies, you can work with your CPA if you choose to do that as well. But don't leave money on the table. Okay. I'm going to open the floor now to any questions. Leah, I don't know if there are any questions in the chat. If you want me to answer some questions, I can try my best. I am not, and let me make a disclaimer, I'm not a CPA or a tax advisor. I'm just an ERC specialist that is trying to help businesses get access to these funds.
Thank you so much, Sharon. That was great. As of right now, I am not seeing anything in the chat or in the Q&A box. If you have a question that you would rather ask out loud, I can unmute people. So if you want to raise your hand, please do so, and we can open up the floor for that as well. So you have a couple of options to ask me questions, and we will get to you. Yes.
Okay. Looks like everybody knows what they need to do. And they have no questions. So that's a good thing, actually. I hope that I covered a lot of the information for you and that this has been valuable to everyone on the call.
We will be sending out the recording in the next couple of days. So just keep an eye on that. Please, I put our information, LaFuerte's information in the chat. You can visit our website to see, you can see our social media there. You can see our upcoming events. You can see our different programs. Oh, we do have a question, Robin Chaskin. I'm going to unmute you. Hello, Robin, can you hear us? You should be unmuted now. No. Oh, think she dropped off. That's weird. Okay. Um, that happens. It's okay. Um, if anyone else has any questions, you can raise your hand, or you can write in the chat, or in the Q&A function. We are looking at all of those things now. All right.
If they have any other questions, they can contact me the old-fashioned way on my phone.
Yes.
620-89988, and we can certainly help give them some guidance and walk them through the process if necessary.
All right. We have a question from Marjorie. I think you're unmuted and you're able to talk. So please.
Hi, Sharon and Leah. Thank you for the great information. My question is what you mentioned about the businesses where you have a 50% ownership, so that they would disqualify if they're 50% owner and they're on the payroll, correct?
Correct. 51%,
51%?
more than 50% ownership, yes. So 51% or more, and none of their immediate family members' W-2 wages would qualify as well.
Okay, so if they're 50%, they could qualify still? Okay. All right, thank you.
You're welcome. Thank you, Margie.
Thank you. Any other questions? Again, you can just raise your hand, put it in the chat, or in the Q&A. We are here to answer all of it. Okay, well, if no one has any further questions, we will end here. Again, if there are any questions that you think of afterwards, or you're having any issues with, reviewing your eligibility, please feel free to contact Sharon at 516-280-9988, or give LaFuerza a call at 516-922-8100. We will send out a recording of this presentation, so everyone has that as a reference as well. We thank you for joining us today, and we hope you have a great long weekend.